Welcome. We will go over Chapter 3, page 85, study problem 3-2. The problem is basically asking us to prepare an income statement. And next we will also have to come up with a common-sized income statement as well. So we are provided with some income statement items, including sales, cost of goods sold, expenses, operating expenses such as general and administrative expenses, and depreciation expenses. And then we have some financing expenses such as interest expense and income taxes. So we are basically provided with all the ingredients that we need. So our job will be basically to include some additional lines that we commonly encounter when we analyze an income statement. And there we go. Let's have a look at this income statement from the givens in the problem. We were initially provided with sales and cost of goods sold figures. So those two numbers, sales and cost of goods sold, was provided to us, and the numbers are listed here. One thing that I would like to point out is because cost of goods sold is a negative value, it would be wise to put this $200,000 in parentheses. And once we get this difference between sales and cost of goods sold, we come across this gross profit figure. So make sure not to miss this number. Then we look into our expenses, and if you remember, we had two operating expenses, including general and administrative expenses and depreciation expenses. The total sum for these two figures is $70,000, and therefore our operating income, which is the next number that we can find, operating income. Sometimes there's another term used, which is earnings before interest and tax, to represent the operating income figure. And that figure is basically the difference between gross profit. So this was the gross profit amount minus total operating expenses, which is $70,000. 325 minus $70,000 should provide us with $255,000. Now we are ready to deduct interest expense and taxes from this figure. If you remember, interest expenses were in the amount of $12,000. So once this is deducted from operating income, we come across the next term, which is earnings before taxes, or you can call it taxable income. And in our case, our taxable income is $243,000. Now, based on this figure, we have income taxes in the amount given, and the difference between taxable income and income taxes should provide us with our net income. So we restructured the givens in the problem so that we can have a better understanding of how the income and expense items of the firms are. So we started with sales, we subtracted cost of goods sold from sales to come across gross profit. Then we deducted further expenses such as general and administrative expenses and depreciation expenses to come across our second important item, which is operating income. And then deducting interest expense from operating income, we came across earnings before taxes. And earnings before taxes minus income taxes would give you net income. So this ordering is very important. Let me actually open a new page to list those items one more time. So let's try to remember together. So we started with sales, and then we deducted cost of goods sold from sales, and the difference between the two will give us gross profit. And then from gross profit or gross income, we deducted operating expenses, and again brackets because it's an expense item. We deduct that amount to come up with operating income. And later on, we also deducted some other type of expense, financing expenses such as interest expense from operating income. That gave us our taxable income and earnings before taxes. And once we calculate our tax liability, taxes due, we deduct that and we come across net income figure. Net income is basically profit that the company makes. That order is basically it. So for a typical firm, we start from sales and we find our way into all the way to the bottom, which is basically net income. And that would also explain why we would call it an income statement, because the whole purpose is to come up with the net income. That's the figure that we are seeking.